Someone asked me, okay, what are the trade management rules? So the trade management rule is when you're adding, this is the first, so let me actually put this one. So this is your first, and then this is your third ad, and second ad, and this is your third ad. So your average somehow comes some around here, depending on how much you're adding. So when I'm partialing out and I'm in profit, I do not let this one goes into...
Hello, my name is Andrew Aziz, the author of How to Day Trade for a Living. Welcome to my channel.
All right, guys, good morning, good evening, depending on where you are in the world. I had a really solid day. So it was about something around $11,000 into TQQ. It was a really nice swing that I had from Friday, and two really amazing trades on SMCI and Tesla. So let's go over it and see what it does. So TQQ, I bought some TQQ on Friday when the market was selling off. Qs were really significantly down, as you see here. So we had a very big drop on Qs. At the end of the day, I bought some TQQ for potential swing, and as you see, Qs bounced back. So that was a very nice profit on TQQ. However, the news came out that Tesla, the news was that the new administration can actually release the regulation on the Robo-Taxis. And Tesla, obviously, one of the big things that Tesla has is the Robo-Taxi. And if Tesla can sell a lot of driverless taxis as Robo-Taxi, obviously is really good. So of course, again, as you see, after the election, we had a really nice pop-up. And of course, now this news that came up that the regulation would be a little bit easier on the Robo-Taxi. So again, another really nice gap up. So we traded that very nicely with at the open. So sold off. So again, was gapping up around 6%, sold off, and heavy volume came in. I went long, popped up above the VWAP, added more, so scaled out, added more a couple of times more for the 345, and then I'll get a stopped out on it in the first trade. So if I want to show you exactly what was the trade, so this was the first trade that I did. So long, very heavy size, partial, added more for the break of 345. I didn't really partial right at the 345 and I got it stopped out. It came back up. I went long again and I got it stopped out. So this was one trade. This was a trade that didn't work. And then I took another trade on it, which was, I think, pretty nice. And that trade was the trade that actually turned out to be super nice. So let's see what that one happens after it came back up. So I went long again through the VWAP, added more for the break of high of the day, did break it out, partial, came back up, again, partial at 348. That was a really nice heavy size trade that we did. And let's see what happened. All the way up to 348. And then let me see what happened. And then last piece I got out of it. So again, 3 trades on Tesla, and 2 win and 1 loss. So this was the first trade that I got stopped out. I made money. This was the second trade, and this was another trade that it was very beautiful. The concept of risk to reward is super important, and I want to talk about the risk to reward because when you go long here, and then when you add here, then your average becomes somewhere in between. Now my stop loss was kind of around the half of this big candlestick here. So I said that if this one comes down, I'm going to get it stopped out. So when you're risking this much, you want to, start partialing at least at around 1 hour and then potentially the second hour. So you want to at least make the partials at the first risk that you're doing. The second trade that I did, which I was stopped out, obviously, as you see, was the loss of VWAP. And then this trade is super interesting because the reason that I'm asking is people ask me that question. So this was my first entry. Then I added here. Now my average is somewhere around here. This is my average. So my stop loss was somewhere around here. I thought that, okay, it's going to come back. So that would be my risk. And then obviously, you started partialing. This one is something about like 5 risk to reward. So you risk, $1, you try to get $5 out of it. So my average was somewhere around 343. And then my partial was at 348. So as you see here, the risk to reward is extremely important in trading. If you want to trade high risk to rewards, you have to always try to partial at least in 1 hour. Another really amazing trade that we did was SMCI. This one was also very important trade that I did. SMCI was gapping up. SMCI is a troubled company. So as a troubled company, it was really sold off multiple times, like from October 29, the auditor quit. They said, I'm not going to audit these financials. This is, I don't want to have any association. Really sold off significantly back to 16. Today popped up and the news was that SMCI is actually getting ready to put the financials, and also the Nasdaq. If they don't put their financial out, the Nasdaq can actually delist them. So it could be completely delisted from the exchange. So there was news that they're already getting ready to respond to Nasdaq. So it was gapping up in the pre-market about 18-20%. What I did again at the opening range breakout at the open, so popped up really above the VWAP. I went long again. Again, the concept of risk to reward is super important. I put the stop loss somewhere around in the middle of this 1 minute candlestick. So that was my risk. It did go up, came down, tested my stop loss, didn't really hit, came back up. I partialed and then I added more because the order flow was extremely bullish. So I added more multiple times, 2 times. And from $20 all the way up to $22.75, I added one more time at 22, and then I got to stop that. Someone asked me, okay, what are the trade management rules? So the trade management rule is when you're adding, this is the first, so let me actually put this one. So this is your first, and then this is your third ad, and second ad, and this is your third ad. So your average somehow comes some around here, depending on how much you're adding. So when I'm partialing out and I'm in profit, I do not let this one goes into red. So I'm getting stopped out right at the break even. And as you see here, somewhere around here, that was my break even. So what was the strategy? Essentially opening range breakout. So it was a very nice opening range breakout at the open. I jumped in a little bit earlier, but potentially a lot of traders in our community traded here as a 5-minute opening range breakout. Very nice fundamental news on that as well. So here we go. So after that, sold off, held the pre-market low. So again, this is a pre-market low, very nice, held and eventually bounced back. Again, I personally didn't trade it that anymore because I was done. And as you see here, it's actually trading all the way up, go to 24. This one might go up continuously higher and higher. So in terms of TQQ, let me show you also the TQQ that we traded that together. It was pretty nice. So TQQ gapped up. So again, I had some from yesterday. So sold some here and sold some here. And I was hoping that I can, have some around up here. But, you never know where is the top. So I got out completely on TQQ. So as you see here, I got some here and some here. Yeah, so that was great trading day. So I trade these guys live on YouTube, so you can actually see. And if you join our community, you can see the entries and exit in real time. YouTube is a little bit delayed, so what you can do is you can join us and see how we're actually trading. Thank you so much, and all the best, guys. And if you enjoyed this video, please feel free to leave your question, and I'll respond to your comments and questions personally in YouTube. Thank you so much.